Let's jump right into this explainer and decode why the stock market feels so wildly unpredictable right now. Frustrated by those daily swings and sideways market moves? Trust me, you're definitely not alone in feeling that. Volatility isn't just some buzzword, it's actually the math behind the madness, measuring how wildly those prices swing. A heavy barrage of macro headlines, from retail drops to rate hikes, literally keeps investors on edge constantly. Looking at all this chaos, many investors genuinely fear a brutal return to 1970s style stagflation. And hey, those fears aren't baseless. Just like the 70s, we're battling high global inflation and supply shocks. But here's the good news. Today's central banks have credible inflation targets, and our economies are way more flexible. So while global inflation recently spiked to 8.1%, projections actually show it dropping pretty fast. Thanks to these structural upgrades, our global economy can likely dodge a prolonged stagflation crisis altogether. So if we dodge that bullet, how do these macro fears actually mess with your portfolio's daily behavior? Well, market corrections usually take two forms. You've got rapid V-shaped shocks or agonizingly slow U-shaped grinds. V-shaped drops are triggered by external shocks. Usually, prices bounce back super fast once that immediate fear passes. Right now, though, we're stuck in a U-shaped market. It's a slow, frustrating correction of overstretched stock valuations. Surviving this U-shape means ditching the panic mode for a solid, actionable defense framework. Let's break it down. Your absolute best defense? Broadly diversifying your assets and keeping a relentless focus on those long-term fundamentals. Just as critical is what you don't do. Avoid panic selling, impulsive buying, and definitely don't neglect emergency funds. You need to set clear valuation boundaries. That way, you manage equity exposure without second-guessing every single drop. Honestly, in sideways markets, patience beats activity. Just waiting for valuations to normalize is a completely valid strategy. Always remember, historical data proves these slow, agonizing corrections are actually just a normal part of generating wealth. Sideways markets test our patience, but forge real wealth. So, is your portfolio ready to capture that inevitable recovery?